Hey, how's it going, everybody? Welcome back to the channel. I'm Jose, and today we're going to do another daily review of my portfolio. Every single day, updating it to see how the portfolio is doing. But before we get started, please, I would love it if you guys dropped a like and a subscribe if you haven't already. It really helps out the channel. I really want to get to that 1,000 subscriber mark so we can start getting some ad revenue, so we can start adding more money into the portfolio, so we can hit that 50K goal as soon as possible. And as you can tell, the portfolio was up green today, was up 13.4%. Probably one of the nicest days we've had in a while. Or, I mean, at least we had one of the greenest days we had in a while. Up 13.4%, $1,433.80, and $31.72 after hours. Both the Dow and basically all the indices are up huge today. Let's actually see an update. As you can see, the Dow Jones up 7.73%, Nasdaq up 7.33%, S&P up 7.03%. So very, very green days. And honestly, I was actually not surprised. Once it broke this line right here, I suspected it to go up even more, and I think it keep going up until it hits this resistance line right here. I wasn't really trying to buy any call options. I would rather buy put options, but I'm not going to get into that. If I see the opportunity, I will buy some. This was a good opportunity to buy some, but I didn't pull the trigger, and that's okay. But if you guys did get into any freaking call options, I'm telling you right now that you made a ton of money today. So let's just see trade spy options. I'm not really familiar with the UI on here, but I knew that as soon, come on, load already. Oof. Let's see. Look at that. As you see, these percentages are insanity. If you bought any call options earlier today or the week before, you are up massively, well over 1,000%. So a 10x, you would have 10x your position, which is absolutely great. But of course, it's kind of hard to time the market every single day. Once the new news comes out, like, the market reacts accordingly. So let's just say that if today the news was bad, that the cases actually increased a lot, then I doubt that the market would go up 7%. But the news today was that finally we might be nearing the peak in certain parts of the United States. In New York, where the state has been hit it's been hit the hardest. The rate of death has been effectively flat for the past few days, which is good because that means they are probably nearing the top of how much people are getting infected and how many people are dying. So if New York is right there, that means it can only get better from here if that trend keeps on following. If we keep staying at home, then the curve should slow down, less deaths, less people infected, which would relieve a lot of things, which might even start to get the markets up even more. And the only thing that we would have to worry about is like resurgence of the coronavirus, which would mean it would go everything would chill out for a little bit, but then it would spike back up again, and that's would be probably what worst case scenario is. Everything seems fine, and then boom, it comes back, and then we have to repeat the whole thing again. So just imagine what happened so far. Basically the past 2 months, the United States and most countries have shut down. Then they would reopen slowly, and then they would have to shut down again, and that would probably cut down the stock. The stock market would probably drop really hard after that. And hopefully that doesn't happen. Hopefully everyone stays at home and the spread stops completely. But I'm still thinking this is gonna last a little while more. Even if the curve slows, everything starts slowing down. I don't think anybody should go out and really like go back to their normal lives just yet. Just go to work and stay out, and don't go anywhere that you don't need to go. I believe they should just keep most places closed, or if not, make sure that there's rules out there so people still keep their distance from each other and not to spread this more. But let's actually go over my positions. As you see, we have Square right here. I have 22 shares of Square, and it's up 16.26% today, up to $50.83. And even with this huge gain today, I'm down 11.4%. I honestly didn't want the markets to recover fast. I wanted them to last a little longer down. I want the markets to stay down for a little bit, at least for the next few months, so I can keep on buying. Because if this just comes back up, I missed a great opportunity to buy. I don't have that much cash on me right now. I'm working as much as I can, even though they're cutting my hours. I'm working. I don't get paid. I get paid every 2 weeks. So every 2 weeks on Tuesday, I will be adding a few $100s to the portfolio. So if this just can last a little bit longer, a few more months, that'll be great. I don't want it to get worse, obviously, but I just want the stock market to stay down, so I can keep on buying things. And the next one that we have here is Facebook. You see Facebook's at $165, up 7.02%. I have 12 shares. Facebook is, I'm actually getting close to my average cost, which is what I don't want. I don't want a market to rebound so quickly. I want it to take a little bit longer to recover. But if what I'm seeing here is that it's starting to slow down, then we might see a recovery to all-time highs. Might take a few months depending on how good everything goes, or might take longer, might take even a year or two for everything to recover. So right, as you can tell, my total return is at $89.67 in the red, down 4.33%. So we're getting closer to my average cost, which is what I don't want. I want it to go down more. Next one, we have Nvidia. I have 5 shares. It's up 10.44% today. It's at $269.38. I'm up a lot on this, 39.14%. I would actually want to add more to this, but my average cost is so low, it didn't even get close to hitting it. And Nvidia, the markets didn't even get to drop hard enough to get close to my average cost. And the next one that we have is Tesla. Tesla's another one that I really want to get into. Right now it's at $513. I believe if it goes under 500, I'll put some more money in. As long as I can get Tesla for under $500, I think that's a good deal. Because just the other month it was at $967 or $76, one of those prices. And probably by the end of next year it will be $1,000 stock. So in a little bit more than a year from now, Tesla will be probably $1,000 if everything comes back to how it was before, and double your money. So anything below $500 for me is a buy. I would obviously want it to be lower than that. I want it to hit back to below 400 so I can get more shares. I wanted to get 10 shares of Tesla. That's my goal. 10 shares of Tesla, at least for right now. I want it to be my biggest position, because right now I think, let's see, I have you can see 5 shares, $503.92 average cost, equity at $2,565, today's return 6.87%, total return 1.8%. So I would love to see Tesla going down more, but who knows what happens. Right now the markets are driven by news. Next one we have here is Uber. Uber's at $26.10. I have 53 shares. I want to get 100 shares of Uber eventually. And it's up 14.37% today. I might have a average cost of $32.41, so it's getting closer to the average cost. I want to get my average cost below $30, maybe even 25, depending on how long this lasts. I have, I'm down 19.47%, which is $334.42. Want to get 100 shares Uber. Like I said, if this, I just want it to be a long recovery. Hopefully, it keeps dipping down more, and it lasts. And the recovery keeps on. It keeps dropping until maybe the end of summer, few months, and it slowly recovers back up. So I have money to buy on the way down, and have money to buy on the way up, because this is probably the best opportunity we've had in a long time to buy stocks at these prices. Roku, I don't think I would want to get Roku to 100 shares, because that would be $8,000. But if I ever have that much money, then of course I would love to get most of these companies to 100, so I can sell some calls to make some passive income on the side while holding these. Roku, $89.44. It's up 9.8% today. I have 24 shares. Average cost is $112.35. It's up. Today's return for me, I had $191.52, but I'm still down 20.39%, which is $549.86 in the red. I would love to get my average cost to below $100 or even to 95, but this is probably one of the stocks I don't want to be buying that much right now. Next one that we have is IIPR. All these cannabis companies I do not want to be buying that much right now, even though they're such good prices. I want to see some good news before I start buying some cannabis companies, more of cannabis shares. I have so much in these right now. These are probably the bigger positions. I do not want to buy any more. I want to get other companies. I want to put more money into other companies, less risky. But of course, IIPR, it's at $70.92, up 6.5%. I have 21 shares. If I ever have the opportunity to buy, once I get my other positions, once I relocate my positions and my portfolio diversity, get other companies higher up that are less risky for me, and then I would like to get IPR obviously below $90 in my average cost. And right now, because you see my average cost is $101.52. Today it's up for my total return. Today's return, sorry, it's at $90.93, but I'm down 30% on this, down $642.68. And the next one, it would be Aurora Cannabis. Aurora Cannabis at 81 cents right now. This is the one that I've been playing for selling calls. Easy money. I get anywhere from 80. What is it? How many shares do I have? 4,800, I believe. 4,800. Yeah, 4,800. I get anywhere from $48 to $96 to 130, 140 something. 146 or 142. So that's good passive income. As you see, I have $3,896 on this. Average cost is really high, $1.82. If I get everything where I want it to be, I want to get this to below $1.50. I'm down way more than 50%, down 55.58%, which is $4,873.97 in the red. Let's go to the last cannabis company, which is Canopy Growth. Canopy Growth, as you see, it's at $14.20 right now. It was up 7.17%. I have 126 shares. So I have 100 shares in this, which is my goal. Won't be buying that much anymore. My average cost is $22.66. Would love to get this below $20. I have $1,789 in this. I was up 7.17% today, which is $119. And total return is down $1,065.38, which is down 37.32%. Now let's go to the other companies, the new companies I bought in this bear market. These are the 5 that I bought: AMD, Apple, Shopify, Microsoft, and Planet Fitness. AMD's at 47.52 right now, up 11.58%. I have 6 shares. I would love to get this to 100 shares eventually one day if it stays this low. My average cost is $41.45. Got in at a good price. 6 shares at $285 right now, up 11.58%, which is just $29.58. Total return 14.64%, which is $36.42. Let's go to the next one. Next one would be Apple. Now this would be a dream to have 100 shares in Apple. $262.81 right now. It was up 8.72%. I have 1,051 in it. My average cost is $235. Good average cost. It's up. I was up $85 today, and total return I'm up 11.43%, which is $107.82. Ultimate goal would be to have 100 shares of Apple. That's like the ultimate flex. Maybe just for me. I know there's a lot of people that have a lot, way hundreds, thousands of times of more money than me, tens of thousands. But for me, that would be like the ultimate goal, to have 100 shares of Apple. Next one, Shopify. Shopify's at $393 right now, up 9.79%. I have 786 equity. My average cost is $338. Very good average cost. Made $71.68, 10.02%, and total return I'm up 16.35% at $110.58. And let's go to the last few ones. Microsoft, another one that I'll probably get 100 shares of Microsoft just because it's cheaper than the price wise is cheaper than Apple. 165. I have 3 shares, average cost of $137.56, $495.87 into it, up 7.45% today, which is $34.38, and total I'm up $83.20, which is 20.16%. 100 shares would be around, at this price, would be at $16,500. So that would be another one that would be ultimate flex. If I can get Apple and Microsoft to 100 shares, ultimate flex for me, ultimate flex. Next one would be Planet Fitness, 8 shares. Right now it's up 15% today, which would be put the price at $42.56. Let's look at it right now. I have my average cost is at $47.40. I'm down on this. Up today 15.15%, which is $44.80. Today's return. Total return down $38.69, which is down 10.2%. So that would be the portfolio. Very green day. Probably would be another a few more green days before there's another red day, in my opinion. I won't be buying much on very green days like these. I would only like to buy stocks on red days. So I hope that there's more red days than there are green days in the next few months, because it's only been a month and I haven't been putting as much as I want to. Money is not coming in as much. My hours have been cut, so I'm not getting as much money. But the goal is to probably put as much as I can. If I could put in another few $1,000s in, if this can last another few months, I could put another few $1,000s in, maybe another $5,000 would be beautiful to get average down on all these positions. So once everything recovers back, the return would be insane. I hope you guys are taking advantage of this. Hopefully you guys had more cash on the side than me. But that's the end of the video. Drop a like, subscribe, turn post notifications on, and I'll see you guys tomorrow for another daily update video.